Hello, ladies and gentlemen. Welcome to Charts and News, episode 22, I think. We're back. We're looking at some charts and some news. I have messed up, guys. This natural gas trade that you're looking at right now, you're looking at natural gas spot price trading at $2.74. And I'm down bad on this trade. But I'm not mad at all. One bit. Because, okay, we might get a pump today. It looks like we can get a pump today. So I can sell it still at a loss. But not nearly as bad as if I sold it right now. But it sucks. It really does, guys. And I'm not a profitable trader yet. As much as I'd like to say it. This is a lesson learned. This is a great lesson learned. Do not allocate too much risk to something as volatile as natural gas, and set your stop losses, guys. Set your stop losses. In these episodes, I act like I know what's going on and I'm right all the time, and usually I am, but this time I wasn't. But I'm not going to sell my entire position because on a more longer time frame, natural gas still looks like it could go up. I mean, all it does is go down. I hate buying it. I don't know why I do, because every time I look, it's like, oh, it's more red. Anyways, guys, negative way to start the video. Let's start with some positivity now. What else is low? Oil, crude oil. Look at this. This is the 1 hour chart. We have a supply zone here and a demand zone here. It is now entering the demand zone. That is interesting. Cracked below this trend line, but it's entering the demand zone, and it's extremely oversold. Now, I'm not telling you guys to buy it, but I'm telling you to wait for some divergences. Wait for it to possibly even go lower into this demand zone, and then you guys can make some money, right? It's that simple. It might bounce off here. It might bounce off of the high of this wick, which it looks like it's doing because there's the green candle, and if so, you probably missed out on a trade, and that's completely fine, okay? But wait for more certainty. Wait for it to get here. Wait for possible divergences to be created over here in the RSI. And maybe even a green MACD if you want to be more certain about it. We see no reason to go in right now, except for an oversold RSI, and that is not nearly enough, guys. All right. What else is tanking right now is silver, my favorite asset in the world. Now, the main reason I show you guys this is because go out and buy some. Go to your local bank. Go to your local bullion. Go wherever it is. Silver is hit a discount today of 2%. Go buy some. You don't want your US dollar. It's dog shit. But okay, we already have silver. If you've been following the channel, you already own silver, and I think silver is in the same position as crude is right now. It's in more of a demand zone. Yes. If we go back, let's go over here. So it's touching the same levels that it was touching the other day when it tanked on January 23rd. So it's back in that demand zone, but all we have is an oversold RSI, just like with crude oil. That's not a reason to go in, guys. It's not a reason to go in. Trust me, I can tell you that firsthand. Wait for divergences, if there is any. If it goes up from here, tough. And look, this is a head and shoulders pattern, so if it breaks that neckline, you definitely do not want to be going in on silver right now. So we'll see how it acts at this $23.10 range. I'm going to put a horizontal line, and I suggest you guys do the same thing around this level. If it breaks that neckline and consolidates, it does not fake like it did here. It just had a big wick and just went right back up. Then I wouldn't short it. I definitely wouldn't short it because I don't like shorting weakness. But if you do, then yeah, you should probably short it. But I'm going to be watching that, see how it acts at this level. If it keeps bouncing and creates a divergence, it's a good opportunity to go long. And if it goes below that, then you have a great risk to reward ratio and you can just stop loss it. Easy. Good risk management there. That's another thing we got to work, or I have to work on, guys, is risk management. I just wanted to show you guys that the bond market is showing absolutely no buying or selling signals right now. And I would not be trading it because it's like as neutral as it gets. RSI's in the middle. There's no divergence. The MACD's neutral, I guess. And the daily chart is kind of the same thing. So wait for anything before you get into bonds. I thought though this head and shoulders pattern would play out and bonds would buy because these are yields. So when they go down, people are buying bonds, but it did not happen. Whatever. What is rallying right now is the dollar. Yesterday the dollar was a big green day. Today it's another big green day. And in my opinion, it's showing bullish divergence on the daily. Look at this. We could even go here. It's going down, and then over here, it's going up. So, what does that ultimately say? Well, you're not going to make any money going long on the dollar because it moves very little. But you can make money shorting equities because when the dollar goes up, equities go down. So, what are we looking at to possibly short? Is stocks, of course, and the NASDAQ. And possibly was the key word because I'm definitely not shorting right now. So, everyone, the buzz this week or these past couple weeks was that the NASDAQ and the S&P 500 finally broke the trend line, and the NASDAQ broke the 200-day moving average, which is this blue line, and it's actually staying above it, which it usually doesn't do. Well, guys, it's been, like I told you, it's been red ever since. So I told you guys that it was before this day. I told you, like, red is coming. Now, this could obviously just be pullback. It really could. And judging from the 1 hour to 2 hour chart, it probably is because we have an oversold RSI with debatably bullish divergence. It's probably it's not, but it's like close. Point is, I'm not touching any of this right now. It's also touching a previous point of support on January 26th, so we'll keep an eye on it, but I'm not. If we see a clear direction, especially Thursday after or near the close, then we're going in because you'll see what earnings are coming out after close on Thursday, and that is going to move markets like crazy, especially the NASDAQ. Tech stock earnings move markets, guys, and I don't know why. So let's look at it. What's coming out? So today we have ExxonMobil, Pfizer, McDonald's. These are more of the blue chip Dow Jones stocks, like Caterpillar as well. And they don't move markets a lot. So you guys can look at it. Like if you're big investors in these companies, then go for it. I'm not going to be paying much attention to it. Tomorrow, however, we have Meta, which is going to move Meta itself a lot after the close. That's interesting. Sony as well. But like I said, what the real day is Thursday. And what's Thursday, you ask? Well, Apple, Google, and Amazon. All three of those are going to move the NASDAQ like crazy. Absolutely nuts. So what are we doing? So my thesis on these three earnings is we have to look at earnings per share and revenue for all three of these companies. The odds that all six of those data points are leaning towards good or leaning towards bad are very low. It's probably going to be a mix of good and bad. So after that, really the charts dictate where the QQQ is going to go, in my opinion. So if we have a clear direction going into the close on Thursday, we'll go towards that direction. Okay, if we have a green MACD with bullish divergence, an oversold bullish divergence, then I'm buying TQQQ and selling it after these stocks send QQQ up. That's what I did for Microsoft's earnings, but it was SQQQ, and it worked. I told you guys, I've seen Microsoft go up 4-5%, and I laughed because I knew that was just a bull trap, and it was, and I made money. Okay, guys, so it's simple. These earnings, they set bull traps, they set bear traps. You just got to be careful, know how to read charts, and capitalize. Whatever this guy just said, do the opposite, okay? So charts suggest that S&P 500 is nearing a decisive moment. He's saying that if it continues to go up from here, then it's bull season, and if it goes down, it's just a fake. I don't care about this guy. I'm only showing you guys this because I assume some people watching this are new to investing. Do not listen to these forecasters, these macro forecasters, these Jim Cramers on CNBC. Many wise investors and traders will tell you that these guys don't know, just like you don't know, just like I don't know. But they just make money off of it, so they're going to say whatever they're told to say, I guess. To explain analysis from Sebastian, who was the founder of trading education company Pay, Kramer examined the daily chart of the S&P 500 going back to last January. So yeah, like I just did, has been able to break through its ceiling of resistance since a year ago. So yeah, it broke the trend line. Guys, that could easily be a fake. That's the point of TA. It's not always 100%. If it was, I would be rich and you would be rich, okay? Anyhow, that's it for today. We're going to keep an eye on oil, see if any good long trades come up, and we're also going to do the same with silver. Bonds, we don't know what's going on. Staying away from that. The dollar looks like it's ready to soar. NASDAQ is also kind of neutral, but more leaning towards. Actually, no, it's neutral. Short-term bullish, mid-term bearish, whatever. We'll have to see what happens, guys. Either way, that's it for today. Nothing crazy. I messed up on a natural gas trade. Remember that. And I am going to get myself out of this without losing a lot of money. Because I believe in greatness. Okay? I love you guys. Peace. All right. Hold the line, okay? It's our responsibility to hold the line. Do not comply to the evil wishes of this world, okay? I love you guys. Peace.